This is market profile, also known as TPO, time price opportunities. In this video, I'm going to show you what market profile is, its main components, how to use it effectively, and how you can set it up in TradingView. But before we get into that, let me show you why market profile has really changed my trading. Before I understood market profile, I was trading blindly. I had a clear grasp of where smart money was positioned by using tools such as footprint and volume profiles, but I lacked an understanding of market sentiment and market participants' behavior. And when I learned this tool, it was a game changer. Let me show you how. This is a trade recording on the NQ, and I will talk you through what I saw here on the market profile. We have the overnight trading on the left in orange and the regular trading hours here in blue, representing the New York Stock Exchange. So we have the value area high for the current session shifting higher, as you can see there. So currently at 43, and I'm going to move this line up now. So I'm acknowledging here by just looking at market profile, which is based on time, that value is building higher. So that here is my long trade entry because I have another reference in the market profile showing me that there's a high probability that this market will push higher, and that reference is here on the left by this F mark here. This is called a poor high, and markets like to fill these poor highs, especially on the right context. And the context here is that the value keeps shifting higher, and we have closed above that value area high, so outside the value area high, meaning that price is very likely to keep pushing towards the next value, especially if there's a reference like this in between. You can see here I'm over $1,000 in profit, and at that point I'm happy to always book some profits or even collapse the trades because that's already a nice move. But target is really the next value, and this case here, the next value is actually the overnight value area low, which sits in at 62, so 20,462. I've been stopped out on this trade example here, but you can see price will continue to go towards the next value. So this is why the market profile is a super insightful tool, because it will show you by the letters and the values where market is likely to go next, given the correct context. And here was very much value being higher, acceptance of prices higher. The auction was not quite finished. We had the unfinished business, which was the poor high, and there that trade was closed for around 1k profits, and it was going with the momentum, going with acceptance of value being higher. And you can see here all of this time that we've just spent here going through the 60s into the 40s and 45s, value once again is now sitting around the 20s. You can see here that at the beginning of this trade, value was still sitting around that 63 mark down here, and now we pushed it higher even one more time. So again, market profile showing the importance of following and going with value. And in this case, value was higher. We took that trade higher with minimum risk on this trade. And this is why market profile is an incredible tool for traders. Let's break down the market profile, TPO. The point of control is the price level where the market spent the most amount of time, and therefore it's the fairest price where the most business was or is conducted. I like to use the POC for different things, such as entries for trades, as well as, sometimes take profits, but also to gauge market sentiment. For example, if the POC is positioned near the upper end of the value, then it suggests a bullish sentiment. Inversely, if the POC is closer to the lower end of value, it may indicate a bearish sentiment. For example, we can take a look. There's one here. So here's the point of control. So this is where on this day, on this trading range, we spent the most amount of the time around, for example, in this case was 6,071. So that is the point of control. And on this day, we had all of the value or all of the various business being conducted around this key level, and it was towards the upper, closer to value high, meaning it's a little bit more of a bullish sentiment. Okay. Inversely, if you had the point of control towards the lower bit of the profile or closer to value low, that may indicate a little bit more of a bearish sentiment. You can see the point of control towards the lower end of value, and then you get like a continuation lower. The value area is the range where 70% of the trading activity occurred. Value is one of the most important concepts in trading. Here are a couple of tips. Don't short higher value or don't long lower value. And what I mean by this is the following. Let's say a market is in this downtrend where each session is trending lower. Okay, so for example, here you've got the value area high and here you've got the value area low. At the midpoint, you've got the point of control. Next session, you come in and you can see that value is now lower in relation to the previous day. So you don't want to long lower value because the market is telling you that it's finding value lower. The next day, you can see a nice trend where it opens and continues by building value relative lower. And then the next day again, lower. So here, this tip will save you from having to long when clearly the direction is to the downside. And you can invert this to the opposite direction. In other words, don't short higher value. So let's say that the market is then trading higher. So as you can see here, so value is going higher. You don't really want to short when the market is telling you we are going higher because value keeps going higher. Okay, so value, super important in your trading. And with a market profile, it's very easy on the eye to see where value is, especially when you hide price action behind these candles. You can just focus very quickly on value. Okay, and I can show you what I mean by having the bars or the candles behind price action. As you can see here, if you have all of the noise from the candles, you can get a little bit distracted and not actually paying attention to the context of the market. So by hiding those candles, you can see, okay, value is higher here. So why would I short when clearly there is an uptrend here? Or inversely, why would I long when value here is to the downside? Single prints are price levels where the market spent very little time, often indicating a potential breakout zone. I mainly use single prints as targets for my trades, long or shorts. However, these could also present new trade opportunities. Here is an example of a breakdown based on the I period being with little time down here. So price was traveling down, and when it got to the I period, it ran through into J, creating a row of single prints here. So it leaves these inefficiencies in time. Okay, so between that 6016 and 6008, there was a row of single prints. Okay, often this indicates that breakout, in this case breakdown, and then typically it gets revisited, next day. There's no time limit or time decay on this. It could be a week, could be a day, could be an hour, but you can see here that it came back up to that single print, got a nice reaction, and then continue with the trend. So this could be used as an entry for a short trade, or a short trade once you see the breakdown, and etc, etc. Poor highs and poor lows. They represent areas in your charts where there is an incomplete auction to the upside or downside. A poor high or low is when there is less than 2 single prints. In other words, it lacks excess. It is represented here by the letters. So 1 letter, it's poor, and 2 letters is okay. It's a good high. So in order to classify for a good high or low, we need to have more than just 1 letter at the highs or lows of the profile. So markets often trade back through these references to complete business. Therefore, it's good practice to have them mark on your charts. When there is more than just 1 poor high or poor low at a similar price range, this is called a weak high or a weak low. Again, the odds for the price to revisit this area is high, since there will be resting orders above or below. Okay, for example, I have 2 examples here of this one here. We have 1 letter only at the lows. That means that this is a poor low. Means that price will likely trade through this level at some point to go and complete this auction. And up here we have this being the J, okay, and then being a poor high, and then on the next trading day we have again K, L and M, followed by again here K with only 1 single. That means that because we have the same sort of price action being 6,095, then you can class this as a weak high. So in this example, we see the market drop down into the poor low, repair the poor low, or in other words, complete business, and then trade higher through the weak high and repair the weak high as well. So again, poor highs and poor lows, mark them on your charts. They can show you if a auction has been completed to the upside or the downside. A D-shaped profile occurs when the market is in a balance. The point of control is typically located in the center of the profile, indicating balance between buyers and sellers. So here you can see a D-shaped profile where we have the point of control in the midpoint. You can see here by the red, it's the midpoint in relation to the high and the low and the value as well. The next day, we're still around that point of control, very D shape, as you can see by the shape of the profile being a D letter. And I'll try and make an annotation here so that you can see, and again here, and again. So this is a D-shaped profile, and you can say that this one here is still classed as a D in some way. So yeah, this is a D shape. And in terms of strategy, you could play where, for example, you have a trade at value area high and you can aim to take your profits at the point of control. Often you get a little bounce and then you could try and aim for a trade back down to value area low. And then once you get to value area low, you then have your trade completed and you can then once again trade back to the point of control with a long trade. So that is a common strategy. The P-shaped profile, which represents buyers. The P-shaped profile typically occurs when the market rises sharply and then consolidates. Let's take a look at a P-shaped profile. So here you can see down we have the shape of a P, kind of looks a little bit like a P here, okay, where you have a thin elongated part split with a single print, and then you have the point of control towards the upper part. So in this case you have a little bit of higher value here, you have the point of control at the high, you have the VAR value also at the high, and then the next day you get continuation higher. Typically, the point of control will act as very good support, extending this line forward. So when we put the bars or the candles back on this chart, we can see that the next day we open, we traded higher, and then we came back down to retest the point of control of the previous session and then seeking higher prices. So this is a good strategy where you try to buy the point of control based on the P-shaped profile and you target the highs, which can be here. So it's a very good strategy by using the P-shaped profile. The B-shaped profile forms when the market falls sharply and then consolidates. This is the opposite of the P profile. A B-shaped profile can occur because of a long liquidation. The upper portion of the B-shaped profile is long and thin, representing a low and unfair perception of price. The wider bottom section represents where price once again reached a balance between buyers and sellers. The B-shaped profile are commonly found during downtrends. When a B-shaped profile is seen during an uptrend, it can potentially indicate a reversal. Because the B-shaped profiles represent longs exiting the market, they are generally understood as a bearish signal. A common strategy is to sell the previous POC or point of control and target the new lows. So for example, here we have a B-shaped profile and you can see that the next day we open, we come up to the point of control and we reject to make new lows of day. I'm going to add the candles or bars here for you to see the price movements. So open, move up to the point of control or previous day and continues lower to make a new low of day. A B-shaped profile arises when two D profiles occur within a specific time period or a trading session. Although there is only one value area and one point of control, some order flow traders will separate the profile into two separate D areas with their own value areas. While B profile shapes are generally interpreted as a continuation of a trend, it is important to note which point of control is more dominant, indicating whether activity was greatest at the top or bottom of the profile. A potential strategy is to watch for breakouts by monitoring price action for a breakout above the upper high value nodes or below the lower high value nodes. Okay, let me show you a B-shaped profile. So we can see here, I'm going to make some notes. You can see here we have the profile, we have the upper B, and then the lower B. I'm going to try and do that again, straight this time. So you can see here, there's the B-shaped profile, representing by a thinner area. However, when looking at a B-shaped profile, the point of control should be something to keep an eye on, because depending where the point of control is, it will show us whose side has been a little bit more dominant and where the sentiment is. And in this case, the sentiment was a little bit more bearish. So it is a trend continuation profile. So when you zoom out, you can see that the trend is down. And in this case, we then get the next day with a move up to the value area high and then a rejection. But to be on the safe side, you can then wait for a break of the lower high value node, which sits around that M period close. That would have been the proper breakout trade. And you can see here that on that day, the after day, we actually got some single prints to the downside, indicating that nice breakout of that trend continuation. So there are a few ways to trade the market profile with the B shape, but the actual breakout would be my favorable strategy, as well as like if it's an uptrend, once you break the high value node to the upside, then you can go with that breakout. And finally, the TradingView setup. So once you have the premium, then you can head over to the indicator section on your charts, go to technicals, go to profiles, and here we're going to select the session time price opportunity. So this is the market profile, and because it's session, this means we can actually input whatever times we need. So in this case, and the way I like to do it is by looking at the overnight trading, which is the electronic trading hours, and then I also want to keep a separate profile for the regular trading hours. For these times, obviously depending on where you are, you're going to have to set your own time zone, but in London the overnight starts at 23, finishes at 14:30, and then for the New York session or the regular trading hours, again starts at 14:30 and finishes at 9 p.m. So this is UK times. For different time zones, obviously you have to input your own. And then obviously for the value is going to be 70 ticks per row. This is going to depend on the asset. You can always use manual or auto or automatic, but I prefer to set manual because it's easier for me to choose exactly what I want to see. But what this is going to do is just going to give you granular price action. So if I choose this to 25, you can see that this is going to become a little bit more smaller, meaning that you can be a little bit more precise with your entries, exits. It's going to be a little bit more sensitive to price. But for the purposes of this video, I'm going to leave it at 50 so that you can all see and follow along. So there's the two market profiles. So the orange will be the overnight trading and the blue will be the regular trading hours where all of the volume mainly takes place. So these are the settings. So 23, 14, 30, Europe, in my case, 30 minutes, manual, 50, and then 70 for the value area. Style, we're looking at just a standard color here, orange, to differentiate, the overnight to the regular trading hours. So one is orange, the other one is blue. And I have it as don't extend any of these. You can extend, for example, the single prints, which is a good idea sometimes because you want to see those inefficiencies being filled. But apart from that, there's really not much to set in here. And then the rest, you just obviously follow along with the profile shapes, value, and you can have them set on your charts just like this. Then once you're trading, and then let's say you do want to see price action, you can always enable the candles or the bars or even a line chart. Okay, this obviously makes it easier for you to see where price is actually going with the candles, for those of you who are used to it. And you can always hide the profile just to see, okay, what is actually going on in terms of like candles structure, or you can just enable again the market profile and just hide those candles. And a little tip to hide, if you don't use one of these, for example the hollow candles, you can just right click on your chart, go to settings, and then just go to symbol and just hide all of these three. And that means that once you click on that, all you're going to see is just the market profile. And this is very good to just keep a clear view of where is value or where is the next untested value level. For example, here, then you can mark, okay, well, the value area high is coming in at, let's go with 19,600. And then you can mark this on your chart if you wish, or you can just extend it. So previous value area high. Okay, and then you can mark the value area low. So we can come down here and do, okay, this is the value area low. So we can go previous value area low. And you can see that the overnight trading thus far, we open, we've looked below, we have a little poor low down here. So this is an unfinished auction. We've come back inside yesterday's value and we're near the value area high. So this value area high is an interesting place because should we reach that 19,600, could be a potential place where we can scalp a short trade back down to the point of control. So it would be something like so. So from the from the value area high, obviously your stop will have to be at the time of entering the trade. You have to choose, as per risk management, and then you can take this trade down to the target, which is the value, the point of control. And in this case, you actually have two values here. You have the value from yesterday's RTH session and the value from the overnight session. So quite a nice confluence to have there. And then let's say now that you've got all of this set up, you've got your values, you can see exactly where, you know, price action is. You can then now go to, for example, a 5-minute chart. Okay, just like I did on the intro video, and then you can pop in your bars or candles, and then you can just be patient and wait for that trade to come to fruition. Okay, and then you can just be on the lookout, set an alert, watch the reaction. If we then go above and then come back below and close a candle back below, then you can take that trade down to the point of control. Okay, and that is how you set the market profile in TradingView. And with that, it concludes our lesson on the market profile. I hope you have a good and solid understanding of the main and key components of market profile, TPO, and that you can now go into TradingView, set it up for yourself, and just try it out. Give it a try. And if you like this video, let me know. Please like and subscribe and write down in the comments, because I can come back with a new lesson on how to incorporate volume into market profile. Because for any directional trade without volume, obviously that trade is not going to go to target. So volume is a key component of any auction, any two-way auction. So if you like, please let me know in the comments, and I will make another video to explain how I use the market profile with volume alongside it, and I will touch on one-time framing as well. So thank you and goodbye.